We've been speaking with top economists to better understand what this economic climate means for companies' bottom lines. Today, I'm speaking with market analyst Gary Shilling.
By the way, I apologize for looking like the Tin Man from The Wizard of Oz. I just had some surgery on my nose to take off some precancer cells. And
Does it hurt?
No, it doesn't hurt. It doesn't hurt. Just looks a little weird.
Well, thank you for taking the time. We want to start by getting your opinion on the biggest headlines. What is the impact of President Trump's tariffs on the economy, both in the long and short term?
When we have trade wars, which we're obviously in, particularly with China, but it's to a lesser extent with Mexico, Canada, etc. But it's the country that's the buyer. When you got plenty of goods around the world for sale, it's the buyer that has the upper hand, not the seller. It's the buyer. And we're the buyer, they're the seller. And that's what Trump realizes. He loves negotiation. That's his forte. So he's basically saying, okay, we're going to negotiate. We've got the upper hand. You're going to have to, you meaning particularly Europe, but also other countries, you're going to have to support what's going on around the world to maintain things. So we're dealing with a different kind of situation. Now, it's really kind of messy because obviously companies that had either buyers or sellers that were used to a trade pattern the way we had before, this is a huge shock. As somebody who's used to buying cheap Asian products, and that's what globalization really was all about. It was the application of Western technology and cheap Asian labor to produce a huge variety of manufactured goods, many of which were exported to North America and Europe. And then suddenly, Trump comes along and says, wait a minute, no, we're not going to do that anymore. Any transition like this is wrenching. It's tough. It isn't a matter that you simply turn on and turn off the tap and everything adjusts automatically. It takes tremendous amount of adjustments. The adjustment process definitely means slower growth. And the second one, which is related to it, is that it is deflationary. You have excess supply around the world. Supply chains, which were developed particularly in China over decades, the last 30 years or more, these take time to get reestablished. It isn't just a matter that you say, okay, we're going to switch out of China. We're going to go to Vietnam. We're going to go to India. I'm particularly enthusiastic about India. But it isn't that these things happen overnight. They are happening. They will happen. But it's very disruptive.
The next question I had is who wins and who loses in this approach? You mentioned India. Can you talk a little bit about the winners and the losers and what does it mean for the American people?
Well, I'm particularly high on India for a number of reasons, and particularly in relation to China. First of all, India has the advantage that it is a democracy. Secondly, India has no population limits. China, as a result of their one child per couple policy some years ago, has a declining workforce. Their workforce is going to be declining for the next 4 or 5 decades. A third thing is that India inherited from the British a legal system. Now, again, it's not what we would call a legal system. It's got a lot of flaws, but at least it is a legal system. And of course, India has inherited from the English language. And that's pretty handy in today's world. Well, if you look at any country, as economies grow, more money proportionally is spent on services and less on goods. Services grow a lot faster than goods. Goods, you can only put so many cars in your driveway, but in services, you can spend almost infinitely amount of money on recreation, travel, medical services, and so on. So India has a number of these advantages, which I think are going to be important in the long run. So, and in the portfolios we manage, and we are money managers as well as economic consultants, we have investments in India, which I'm very, very happy with and think are going to continue to do well.
Great. That explained a lot about why you're so bullish on India. I want to bring it back domestically for a second. Do you think that these tariffs will put the U.S. into a recession?
I think that the disruptions caused by the tariffs are going to put us in a recession if we're not already there. And the fact that we've had this change of approach, the U.S. is no longer supporting the free world. It's really forcing other countries, particularly Europe, to carry their own load. Most other economies have, throughout the post-war period, they've had trade surpluses versus the U.S. U.S. has been running deficits. I think that, Trump's the guy who pulled the rug out from under it, but the situation was really untenable anyway. Sooner or later, it was going to be much more every man for himself as opposed to U.S. supporting the free world.
Shifting gears a little bit, what's the future of manufacturing in the U.S.? Will American workers be able to keep up with the AI and robotics revolution?
It's not as rosy as Trump would hope it is. The reality is that if you look at manufacturing employment as a percentage of total payrolls, coming out of World War II was very, very strong, but it is declined. Now, it's declined for two reasons. As economies expand, people spend more money on services proportionally and less on goods. So that works to the detriment of manufacturing. But the other one is basically globalization. It's the fact that Western technology has been available with cheap labor, particularly in Asia, and it has created manufacturing powerhouses, particularly in China. So manufacturing to return to the U.S. in anything like what Trump may be imagining or like we had right after World War II is just not logical. Okay, if you went to all-out protectionism, and you said we cannot import any manufactured goods, you could force it, I suppose. It would be pretty tough on the economy, but manufacturing is just not going to come back. What is coming back in manufacturing is what we have had. It's the design. If you look at high-tech areas, a lot of the design of various high-tech areas, the design is done here. The manufacturing is done elsewhere. Semiconductors basically produced in Taiwan. They're not produced here. They're designed here, but they're produced elsewhere where labor is a lot cheaper. So manufacturing, high-end manufacturing, some of it is returning to the U.S. and will. But in terms of having factories that employ, thousands of people, that's highly unlikely unless it's forced by tariffs. Now, to a certain extent, that is true. Again, unless you have all-out protectionism, it's just not feasible to see serious manufacturing return to this country.
We're in the business of competition. We're trying to beat our competitors on the track, but to do that, you need to be able to beat them off the track. Workday is a critical partner of ours to help us run the most efficient business possible.
What will the trade war do to the value of the dollar?
Well, the dollar is the international currency. Of course, there have been periodic poo-pooing of the dollar in the last 40, 50 years. We did a detailed study of currencies that were the global currency going back to ancient times. It's usually the largest economy in the world. It's one that has higher productivity growth than other economies. It has open and free markets, and credibility is another important one here. But if something would change here, if credibility in the U.S., and that's probably the most vulnerable, if that would suddenly disappear, you could see a change. But then the question is, what would be the alternative? The Chinese would like their currency to be the world leader, but they want to control it. Now, they're out. Europe, the euro, they've got enough problems there. They've never been able to have an international currency. Sterling was in the 19th century, but that's history. And Japan does not want the yen to be an international currency. You kind of run out of options. So I just don't see any great change that's going to dethrone the dollar. I mean, if you look at the dollar, if you look at the total of international transactions, 89% of them involve the dollar. Unless you see something violent happening, I don't think that's going to change.
How can companies protect their bottom lines during this time of political uncertainty?
I think that businesses, particularly small businesses that don't tend to have huge excess liquidity, ought to build fortress-like balance sheets and be very, very cautious in terms of investment and spending. And hey, if things don't deteriorate further, fine. But if they do, at least they're prepared.
Okay. On the flip side, how should American workers best position themselves in this economy as it keeps changing?
People have not been saving. People have been borrowing very heavily with credit cards, which I think is extremely risky because if we're either in or close to a recession, there are going to be a lot of layoffs. People are not going to have incomes they can count on. And so it's a good time to have savings so they can prepare for tough times.